Hello, everyone. Thank you so much for joining our last live Q&A session for this afternoon. We have the Greenleaf team here with us today discussing our retail portfolio of the business. And here we are going to answer any and all questions that you may have regarding maybe your particular investment or overall strategy, and also kind of get a deep dive, or I guess really an understanding of what is next for the retail segment of the business. Without further ado, we have Dave and Andrew, and we will begin our discussion on the retail segment of the business.
All right. Thank you very much, Dominique. I hope we can answer them all. I got stumped on the last, and our commercial one, I got stumped a little bit.
I was watching you. I saw I have to defer that.
I was like, oh man. But
so the goal now is not get stumped.
But we'll see. We'll see. So we want to touch base on a couple things that are the ins and outs, go over prefs a little bit, and then dive into questions. So on the deals that we acquired side, right? We had some positive action.
Two great purchases. So we purchased the Family Dollar in Decatur, just outside the city of Decatur in Metro Atlanta. Fantastic purchase. We're actually in the process we just finished painting it, and Ethan is in progress of getting our parking lot done, and we're doing some roof repairs. And the store manager is very excited about the paint job we gave the place, and so.
Wasn't there like a leak in the middle of it when we got there too?
Oh yeah, the roof was leaking, and it was a whole big thing, but roof's doing great. Place looks great. And once we get the new parking lot, and not only that, but we might be partnering with the strip mall neighbor, and the strip mall neighbor might be doing their parking lot at the same time we do. So it'll be a pretty parking lot.
If y'all don't know, Ethan is on our project management team. So a lot of our CapEx projects that happen, whether it's replacing a roof or a parking lot or windows, he is out there helping to make sure that we get these projects done. So a lot of thanks to Ethan. He is phenomenal at handling a lot of that stuff that comes in.
Oh, and don't forget of our my favorite, Lithia Springs Applebee's. So of course that was a great purchase. It'll be probably and it'll be one of our last 3% interest rate purchases for 2021. Unfortunately, do you see 3% interest rates again?
No, I was wondering if we're going to see 4% interest rates.
Yeah, so
that one 4% might be.
We're still modeling mid fours, but we'll see what happens, in the next couple months.
Yeah. And then on the outside, I guess we have to talk about Edgewood too.
Oh yeah. One more purchase we have coming up too.
That's in the works. So
this is we're buying a piece of land, but we're buying a piece of land to connect to our 330 Edgewood restaurant. So the biggest problem on Edgewood right now, of course, is parking. And so there's a piece of land that came up for sale that is literally enclosed in a little block area that we are trying to buy, and it'll add I think it was about 30 parking spaces to our Edgewood restaurant, which will make our Edgewood restaurant much more marketable. We're going to actually be able to collect rent from the parking lot, and so it'll be additional revenue for our Edgewood property and our triple net fund one.
It's contiguous with the other piece of land we have.
Correct. And it's a little bit more complicated too, because we have to get the city to abandon a little road there.
Yeah, it's almost, if you look at a city block, it's like the inside of the block, and you can get to it through our property. But we can use that for parking. Our tenants agree that they'd pay us rent for that spot, so we can get that, have a much bigger parcel. So that'll be a great acquisition as we line that up here. But
it'll make the Edgewood property much more valuable too, because
there's just not a lot of parking in that area.
Yeah, so you'll have a nice restaurant with a big parking lot. That doesn't exist.
Not down there, it doesn't.
Yeah.
On the exit side, we the last time we did our update, we were talking about the O'Charlie's sale that happened. So that was a good deal. I mean, overall it was a little rocky emotionally.
Yes.
Financially
it turned out
we had just about a 10% return.
No, we Duncan and I actually did Duncan's our analytics person. We did a whole analysis on it, and we thought it was around a 10% return on investment, but it ended up being like closer to 13 or 14% overall project return. So it was a pretty good.
That's good. Other than our emotions, it was good.
That's a good double, I'd say. And it was a great time to sell. They had 2 years left on their lease. They were kind of wishy-washy about renewing the lease, and so we just said, you know what, let's just take our double and move on.
Yeah. Another one we sold is one of the strip centers.
Yes.
That we had. And this is we knew going into this deal that it was going to be great, because we were buying a strip center that had national brand tenants. We had Vitamin Shop, Mattress Firm,
and Aspen
Dental. Yeah. And an out parcel of that was a Panera Bread, standalone Panera Bread, and we sold the strip center part.
Yes, just the strip malls.
We kept the Panera Bread.
I love this deal. We did everything right in this deal. We bought the whole entire center. So we bought the 3 tenants and the Panera for about roughly 5.6 million. And we're just selling the strip mall part. So the 3 tenant strip mall part, we're selling for 5 million. So we basically got a Panera for $600,000.
It's a pretty good deal.
And the Panera is roughly worth about 2.7, 2.8
Yeah.
million right now. So this was a big home run for us.
So yeah, so when we talk about like, are there opportunities out there? Certainly we just have to be creative in how we find them. Got to look at a bunch of them to get them. And eventually we find ones like this where we had not been out trying to buy mattress shops. That was not a target, but we found this opportunity just from what we were looking through, and it turned out very well. So we're excited about, and that has not closed. We're working on that. We're going through the process now, but we're pretty pumped about how that one's going.
Yeah, we're looking at a mid-May to end of May closing right now for that.
So if you are invested in that, we're going to have more information coming out on that one. It won't be a secret. We'll tell you and let you know what's going on.
And you'll be very happy with us. Just
The other part for the quarter, all of our distributions went out on the 20th. So we are working hard to make sure that on the 20th, we consistently send all of our quarterly reports. You have all your information, and money is sent out. Now, when you look in the investor portal, we date everything as it's going out at the end of the quarter. So it could be dated, or not, it would be dated the end of March. And then that's going to hit April 20th when we send those distributions. So you'll see that in every quarter going forwards, that we do post them at the end of the quarter, and then everything hits on the 20th.
all great news, all great news.
Yeah. So we want to dive into some questions here. Let's bring Natalie in and see if we can answer all these.
Great. Our first question is on distributions. So when will Grapes and Grains begin their distributions?
I'm going to let you take that one.
It's on track for the most part. It's like, what does that mean for the most part? But when we signed the lease with Grapes and Grains, they had 6 months of free rent. Basically, that was their concession period. And so that ends here in May. And the part we are working on right now is we have to dig up the old septic system that's in the back. So we are working through how does that happen to get that dug up. Grapes and Grain is operating. They've been making money and doing well. So that's exciting. So we expect that rents, they have not been able to use their drive-through because the septic system is back there. So we're aiming to get that out here in the very short term. We have everyone out there with all the equipment ready to do it. So we do expect that we'll start receiving rents here with maybe a little bit of concession in June. And then going forwards, we'll have our full rents in. And then from there, we'll be able to start making distributions on that deal.
I went there
So-
just before it opened too. The store looks phenomenal.
Oh, yeah, we used a GC firm, Mueller Purcell.
Yeah.
And they do some.
That place went from
phenomenal
a dump. It was basically a
work. I
hoarder.
was in a dump. I mean,
it was a hoarder's paradise.
it just
wasn't
needed some love.
It just need-
It depends if you like hoarding lots of stuff in there. It
that
was nice.
That was the place to go. Because
That
it
was
was
the place.
Yeah, and then it had to be cleared out, and it was
Oh yeah,
Yeah.
it was. I mean, multiple tractor trailers.
it was amazing. That was an amazing lift.
And now it's beautiful now. So Grapes and Grain, it's located right, if you're in Atlanta, it's just on kind of the south side of Chamblee on Peachtree. It's a great building. It looks beautiful. At least go check it out and look at it.
Yeah, and
So-
go buy alcohol from them.
They have
I-
the prettiest concrete floors I've ever seen.
Yes, very pretty concrete floors.
Our next question has to do with reserves. Can we discuss those, how they work, and adjustments that are being made to those quarter over quarter? Specifically, it seems that Applebee's, Seneca, Zaxby's, and maybe the Triple Net Fund all seem to have really high reserves.
For the most part, our reserves are consistent in strategy across the triple net, and they shouldn't vary too much on a property by property basis.
Right, for a triple net deal, so a full triple net deal with no landlord responsibility, we're reserving 3 months of mortgage payments, but that's it. But like, other
Yeah.
properties like Family Dollar, some other locations that are not full triple net, we will put reserves on them, but it's just the
For
reserves
operating, yeah.
for operating reserves, right? So
Yeah, and we think about our deals, I standpoint of a lot of them are triple net, but we do have, you know, it's almost a third of them are also double net, where we have some kind of responsibility that we're tying
Right.
into.
And there's also some odd things that happen too. Like a lot of the Dollar Generals, they're double net, maybe effective triple net sometimes, but they do silly things like they make us float the taxes. So we have to pay the taxes ourselves. And then we
Oh,
get paid back 2 or 3 months later from Dollar General. So we have to float
Yeah.
tax money for 2 or 3 months sometimes, which is kind of a pain.
But what was it? Was there a specific, you said Applebee's that had a specific
Yeah, because those are all triple net deals you mentioned, Natalie.
change in
Applebee's,
reserves?
Seneca, Zaxby's, and Triple Net Fund.
Triple net, in the side, the triple net fund is 330 Edgewood. And 330 Edgewood has different reserve requirements because we reserve for taxes, insurance, and we have a operating reserve too for that one. So the only Fund One reserves that we reserve for ongoing right now is Hendricks. I mean, I'm sorry, it's Hendricks, it's called Hendricks R, but it's basically 330 Edgewood. Yeah.
Next question is on sales. So how much of the O'Charlie's will be in kind? And for that deal and others, can we get directional advice with respect to taxable events?
Well, so O'Charlie's is,
So Charlie's is owned by two entities
Right.
that are Fresh Equity and then a 1031 exchange that came in. That's going to be a tech,
right.
right?
And on the fresh equity, the fresh equity side is Triple Net Holdings. And then we're taking the Triple Net Holdings portion and we're going to trade that cash, take that cash and then buy the Edgewood land property. So that's the current strategy
Yeah, but
right
it's
now.
not. So that money went from O'Charlie's and it went back into the triple net fund,
Correct.
not as a 1031 exchange.
Yes, as a 1031.
Right.
Oh, so we are able to do 1031 exchange for this, for just the Fund One portion.
Just for the piece of it that goes back to the fund.
Correct.
And then using that money to acquire the Edgewood.
Edgewood land, correct.
Land.
And the Edgewood land will probably close in 60 days, maybe 90 days. So it's
Yeah.
definitely a long runway
so-
for that deal.
So there's two different investment groups that were in O'Charlie's when we bought it together. One being the fund and one being an older 1031 exchange we had that we put them together to form a tenants in common TIC to buy that asset. So the original 1031 is staying as it's 1031 and going. And this one's coming back to Triple Net Fund One for Edgewood, but neither one of those would have a taxable capital gain event currently.
Correct. And just in round numbers, roughly 50, Fund One owned roughly 50% of the O'Charlie's, whereas the 1031 owned the other 50% of the O'Charlie's.
Okay, going back to the reserve question, so for more specifics, they're trying to figure out why available cash at Zaxby's is 73,000, but the goal for the reserves is only 18, and we're not distributing that excess cash.
Which Zaxby's I would have to look at.
Yeah, I'm
this.
looking at which Zaxby's it is.
We have Kennesaw, which we just made a big distribution on recently. And then we have the original Zaxby's from 2018.
Kennesaw.
So Kennesaw, we just had a big distribution on. So that would be the N011 property. And I believe we just made a pretty big distribution, including some return of capital.
Yeah, so we distributed. Yeah, so we had 43,000 there. We distributed $41,000.
Yeah, and is that included the return of capital or not include the return of capital?
Yeah, so this is so Zaxby's, we had 10,000 as return of capital, $14,368 as pref, and $10,498 as profit.
Okay.
So yeah, so we had extra cash there.
Okay. Oh, so when this was pulled, then the extra cash was showing on the quarterly report before the distribution or after the distribution?
The formula should show prior to the distribution so they can see how much is then distributed.
Okay, so then that cash was then distributed.
Yeah.
Okay.
So all of those should have hit your account for those deposits pro rata for those amounts right there.
Next question. Are you able to see same store data on revenues to see how our stores are performing?
We would try and like to get that in all of our leases, but that's
Yeah.
just,
Well, the easy
don't get
answer
it all of
is
it.
we get it on Hendricks, we get it on our Edgewood property, we get it on our Zaxby's, we get it on our DQs, but we don't get it on our Dollar Generals. We don't get it on, we get it on some Applebee's, but not all Applebee's. So The real answer is it just depends. And a lot of times if they don't formally release it as part of the lease, we can go in and talk to the store manager, and the store manager is always happy to brag about their
But
sales.
that's definitely something that's in a lease.
Sometimes it's in a lease and sometimes.
Well,
you can get it-
if we're gonna go get it, it would be in the lease. If it's not in the lease, we're probably not going to go get it.
No, well, if it's not in the lease, we always have the option to just go and talk to the
To
store
go
manager.
ask and
to
see
go
if they'll
ask.
give it to us.
Yeah, and
Yes.
so a lot of times
Yeah.
the store manager loves to brag about their revenue, and so we just say, okay, well, fine, tell us
Yeah.
what your revenue is. And in fact, that's what one of the recent purchases we had. Sales are not formally released, but we're getting sales directly from the store manager. So
Yeah.
the easy answer is it just depends on the property and the lease structure.
But we try every time.
Absolutely, absolutely. And Dollar General, just so you know, has a strict policy of not doing it, which makes our life a little bit harder, which is why we place a
Yeah.
lot of place a lot of emphasis on foot traffic when we're buying Dollar Generals, because foot traffic essentially equals sales for all of our Dollar General purchases right now.
Our next few questions have to do with brands and expansion. So first, are there any new brands you're considering purchasing?
Well, we're always looking for brands that are expanding. So we want to find brands that are have a growth mentality, that are in our markets and expanding more in our markets that we're looking at. So you can think of anything like right now. I mean, we've looked at a lot of different brands.
Right.
Anything new?
We love Applebee's. Applebee's is a mature brand that had a huge turnaround during COVID. We always love Zaxby's. Zaxby's just have they were purchased by Goldman Sachs, and so they obviously have growth plans. We're also looking at emerging brands too. Like there's a brand called Walk-Ons right now that's just a sports bar, which is an emerging brand. So we are trying to focus on some of the mature brands that have growth plans and also some of the emerging brands. And to tell you the truth, a lot of the emerging brands and mature brands, the pricing for all of them is just bonkers right now. So it's hard to find some of these deals in our pricing.
Yeah. So, I mean, we are looking, we haven't found any new ones that kind of pass the test and that we're saying, hey, we're going to go after these and buy them. But we're definitely looking at more brands.
Yeah.
And Andrew would love to buy Captain D's if we could find one.
No one's giving me a Captain D's yet, but we love anything with a drive-through. We love our dollar stores, and we even love our fast casual restaurants too, with a nice carry-out business or a delivery business.
Can you tell us how the Texas and Florida expansion is going?
It's going pretty good so far.
Yeah. I mean, we're seeing a lot of, we have the Applebee's clean
We got
coming
our
up.
first Texas deal.
We have our first Texas deal
Yeah.
coming up. That is an Applebee's. We're very comfortable with Applebee's. So that's an easier one for us to get into because we know more about that brand. But I mean, we're seeing a lot of deal flow coming out of both Texas and Florida into our investment committee reviews that we're going through. So we're excited to see a lot of traction coming out of that. And we've got our first one coming that'll close in the second quarter. So really, I mean, we started kind of in the fourth quarter and, 1.5 quarters in, and we'll have a deal out of it. So that's positive.
And the Colleen Applebee's is a phenomenal Applebee's. In fact, it's the highest revenue producing Applebee's that we've ever bought. So it's the cruel joke about Florida and Texas is that we managed to go into the most competitive markets of all the markets in the US. So thank you for that one there, Dave.
And are there any other areas you're looking to expand into?
Well, geographically, so open, and really anywhere Texas and Florida, but I mean, we continue to look areas as long as they have positive population growth for a significant amount of time, not just like, oh, hey, the past couple of years population went up, but like we've got to see pretty steady population growth for us to get interested in the market. That's really going to take anything out of the Northeast out. It's going to take, the Northwest has, I know Idaho has pretty solid population growth right now. I'm not sure what that looks like long-term going back, but for the most part, that kind of puts us like Mason-Dixon line and down.
And don't forget what we've learned about our triple net properties is triple net properties are easy. So triple net properties really, our geographical barriers are a lot less limited. So if we buy a deal, we could buy a deal in Virginia, we could buy a deal in Alabama, or I don't know, if we buy a deal and we can't buy a net deal in New York because it would probably be too expensive.
But also New York doesn't have positive population growth right now.
Right. So if we take the US map and look at the states with net positive population growth, and we find great triple net deals in those markets.
Yeah, those would all be, I would say that'd be an option then.
Yeah, that would be fair play for us.
Yeah.
We're going to go back to the previous tax question with some clarification. Would it be possible to include in the quarterly narrative page any tax implications from the prior quarter? To be clear, not tax advice or even precision, just directional advice so we can do loss gain planning with other investments.
Tax consequences of our movements is what it's asking. Okay, gotcha.
I mean, I guess it could be inferred from the P&L gains and losses, but saying specifically like a capital account ins and outs, like on an annual basis, once we close a triple net deal, all we're going to really have is the starting capital account, and we're going to have contributions. We're going to have gains going against that capital account, and then we're going to have distributions that come out. So if our capital account starts at, say, $100,000 investment and we earn $10,000 against that capital account and distribute $8,000. So you'd see your capital account go to $102,000 with $8,000 being distributed. Going through that exercise though, and then creating a capital account tracker for each deal and each investor, that'd be a little challenging to put on the cover page because there's not like an automated way to break that out. So we'd have to look at, and we can certainly give that to someone at any time because it's pro rata of what the retained earnings are on an asset.
And there's also a heads up we can give. We're selling this. We are trading it into a tax-free exchange, or we're not trading into a tax-free exchange. So then,
yeah, we're typically anytime we have a taxable event happening, whether we're going through a sale, we're putting feelers out there to say, hey, do you want to participate in a 1031 or do you not want to participate in a 1031? And that's when you'll hear us talk about a propco entity that we set up to distribute money and not participate in a 1031. But I think from a generically creating all capital accounts and sending them out on a quarterly basis, like we could certainly tell you pro rata, it's your pro rata percentage of ownership against really the retained earnings. That's going to determine a capital account balance. We could give that to you at any time that you need it as you're going through tax planning for the year, especially if you have some other outside event that happens and you're thinking, hey, should I look at a 1031 option outside of Greenleaf with something else you're doing, or should you sell something and you're going to have a tax liability? We can certainly give you like, hey, here's where you're currently at on your capital accounts with Greenleaf at any point in the year and where we think it's going to end. But that's more of a one-off, like as needed in relation to what you're doing. I hope that helps. I think that might be what you're looking for if it ties to other tax situations that you're coming into, or if it's just us. I'm not sure on that part there.
Andrew, you brought up the topic of ease of operation. So are these deals really as easy to operate with no expenses to the owner?
On a full triple net deal, one of the jokes inside, Mark, our chief of staff, he says he loves our deals because they're very little work for him. And there's a metric we use. What's the metric called? Dollar or
revenue per employee.
Revenue per employee.
Revenue per team member. Yeah.
Yeah.
It's like we're looking at how much revenue per team member can we bring in, and the triple net ones, and that's really just how we judge how efficient is each dollar brought in of revenue.
Right. And so the triple net business is the highest, basically dollar per employee, because they take very little work, especially our triple net deals. In fact, honestly, the dollar generalists tend to take up a little bit more of our work. We receive literally no management time on our triple net deals, other just making sure the taxes are paid. We're paying the mortgage every month and the accounting.
Yeah, and we haven't had any. I mean, going into the Family Dollar, we mentioned we did some parking lot work there. We did some roof work. We knew that going in, it came up on our inspection reports, and that was part of the deal. But outside of our going in CapEx work that we know of on a deal, we, knock on wood, we haven't had any real expenses that are flowing through to us.
Right. Well, a lot of the management is, honestly, it's as silly as it sounds, the brokers calling us all the time and then asking us to sell our dollars.
That's but no, I mean, maintenance wise, we haven't had anything. They've been true triple net. We haven't had stuff come through to us.
Yeah.
And then operationally, they've all been pretty smooth. So they're efficient to work on. And that's why when you look at our financials on the net lease deals, like we don't have a management fee in there. We have an asset management fee,
right?
Because it's a lot, which is a lot lower than a management fee.
Yeah, and the asset management fee basically pays for the Greenleaf accountant. So we have a employee who.
Yeah. So,
does-
but
pays
it's a
for the
lot more
accountant.
efficient.
Yeah, and
just
you
allow
know,
us to do.
whenever we do get the phone call, somebody has to do that, but we don't have one full-time person for that task. It's a shared task among many people.
Yeah.
And these are easy managed deals, very easy to manage.
Our last question for you, with rates rising and deals being harder to find, how many more opportunities do you expect to see in the coming months?
Oh, boy. That is the question.
We need a crystal ball.
That's a tough one.
Well, we've got two that are coming up.
We got our Colleen Applebee's and we got our Sevierville Dollar General. And then those two are we got 4% debt on both of those deals. And I think that's officially the last of our 4.0% debt for the year. Would you say that's accurate?
4.0 debt, probably, definitely.
Yes.
It's,
We make it.
hopefully we can sneak some others that are in the fours, but,
Yeah.
but
So
yeah, like specifically how many more deals are we going to be able to find? We're hoping for at least a handful of deals that we can put together.
Well,
And
our goal for the year is 12 and we have 4 on our radar right now. And we have a whole deck full of deals. None of them have landed yet. But
Yeah.
So we have a target of 8 more for the year inside retail. And we have some more in Florida and Texas too.
and to get 8 deals, to get 12 deals, I mean, if we're going to get 12 deals, we're looking at between realistically like 1,400 deals that are going to go through our filters to get down to us buying 12 of them. And that's not like 1,300 where we saw an email and deleted it right away. That's 1,300 where we're actually looking at what it is, where it is, how does it work. So there's only a little bit that's actually going to make it through based on the filters that we have in the brand. So we're still optimistic about getting to 12.
Right, but don't forget, there's also this marker that's happening right now. Interest rates are going up. And then if interest rates are going up, what should happen? Cap rates should go up also, but cap rates are not going up. So we're waiting for cap rates to start to go up.
Yeah,
while
they
interest
normally
rates are-
lag the interest rates a little bit.
Right, so we want them to stop lagging soon.
Yes.
We had one more question sneak in. So what, if any, changes are you making in preparation for a possible recession and 5% plus inflation? That is, do you expect deal mixes to change because of these realities?
5% inflation or 5% interest? I think interest rates or inflation in the first quarter was 8.5% that was published out there. And I think rates, as they look at 2 or 3 more increases, realistically, seen debt rates north of 5%, I think is highly likely. Now,
I'm not gonna be happy that day.
yeah, I mean, but that's just kind of like what the market is. So,
Yeah. So just to be for reference though, if we're getting 5% debt in our new deals, last year we were getting 3.5% over and over and over again. So that's a big change for our business too.
yeah, no, definitely. I mean, it compresses that spread that we have. It wasn't too long ago that we were talking about some of the deals we were getting. We had the best cap rate to debt spreads that we had seen, and that's come down significantly. So as that does come down, it lessens the amount of deals that will meet our metrics and that we can close. So we're just gonna have to look at more deals to be able to find one that is actually there, and that's trying to find sellers that need to sell something for different reason here or there. But that's just increases the amount of legwork it takes to go find a good deal. And then it also increases the amount of legwork on the debt side to make sure we are looking at all available debt options out there. We're seeing between different lenders, 100-point swings in debt costs. So it's not like we call them all and we get the same answer. We're seeing some are in the 5.5s already and some are 4.
Right.
So there's a big spread on what we look at with deals. So we're actively talking to as many banks as we can really to make sure we're getting the best that's in the market.
You went out with a banker last night.
Yes, I did.
So,
Spent some
and we
good
also
time.
have a full-time person searching for debt too. For us.
Yes,
So,
so
I mean,
Elena joined us from the banking side, and
Yep.
now she's helping on that front. But on the other aspect of, inflation goes up, like what does that cause? Is that going to cause a recession? We haven't. I guess we technically had a recession in 2020 for a blip there, and then it went gangbusters again.
yeah, and then everybody earned 20%.
Yeah, but we didn't have. I think recession or no recession, the amount of inflation that's happening at some point, that's going to hit people's pocketbook, and they're going to say, well, stuff is more expensive and I'm going to slow down on spending.
Yeah, I've already
So-
had the $90 dinner for 3 of us at a
At Applebee's.
And not Applebee's, but locally, but I'm assuming with you got your crew, so you're over
more-
$100 every time you
No, I
go to
don't-
eat for
I
dinner now.
don't take my kids out. That's too crazy.
Oh,
They'll
okay.
destroy the place. No, I'm just kidding.
Okay.
But I think, the brands that we're focused on, that's kind of fast casual. So anytime we have like, people are going to go spend less money, which I think is more and more creeping into the mindsets of like, look, if inflation's at 8.5%, at some point that catches up and you're like, wow, stuff's more expensive and I can't go spend as much money. So what are you going to cut back on? And a lot of that, that initial stuff that's cut back on is things that are more ancillary and fun.
Right. But this is what my Zaxby's operator told me, and I'm always going to remember this. He said, look, when the economy is good, the poor people eat here. Lower income people eat it wherever. When the economy is bad, the upper middle income people eat at Zaxby's. So Zaxby's and these middle income fast casual restaurants will always be okay because the demographic of whoever, wherever the economy is, they're always going to have customers. The top end restaurants, like the really fancy restaurants and the $200, $300 dinners, those are the restaurants that are impacted the most.
So that's our philosophy on it. We feel like we're in a good spot with the brands we're on and that they have a staying power in the market they're at. So that doesn't mean we won't be affected at all, but we're also making sure we're buying brands and locations that have good foot traffic data, that have good sales, that are the higher end of their own brand, so that if a brand as a whole does have a decline, our theory is that they're going to cut their lower performing stores, not their better performing stores. And that's really when we're looking at our net lease investments, we're trying to focus on making sure we have the best stores in the pool for a brand so that we're protected against that stuff.
Those are all the questions we have. So this closes out our quarterly review. We certainly appreciate all of you joining us and for your insightful questions. Thank you again for joining us and enjoy your day.